When it comes to investing, you really have two solid investment choices. The first one, you can invest broadly into something like the VOO, the S&P 500, or you can fine tune those selections to meet specific needs that we're building in a portfolio. In today's video, we're going to be looking at two high yield dividend ETFs that I focus on and that I'm building portfolios around. And one of these I do hold in my own portfolio. So looking at these two, and the two that I've chosen is the Vanguard High-Dividend Yield ETF, which is the VYM, and then the Invesco S&P 500 High Dividend Low Volatility ETF, which is the SPHD. So a little bit different than we've seen in the past, and how to decide exactly which one of these are for you. And if you hold either of these, let me know in the comments down below what percentage you hold in your portfolio. So what does the Vanguard High Dividend Yield ETF actually do? This is getting down and breaking the fundamentals of what it does. Exchange traded funds, index based. It follows the FTSE High Dividend Yield Index. So the fund charges a 0.06 expense ratio, which is super low, but what exactly does it do? Thinking of this one, it's pretty simple to understand. This is more of a basic one. Selects all the dividend stocks in the stock market. So think about that. When you look at diversification, it looks at all of the dividend stocks in the stock market. It removes real estate investment trusts or those REITs out of there, which is odd because those are income generators. After this step, it lines up the dividend stocks that are left from the highest yield to the lowest yield. So when we think of like the debt snowball, anything like that, it is the highest yield to the lowest yield, selecting the highest yield 50% of the list of the final portfolio. So you are getting the 50% of the cut that they have left of the highest yielding 50% for the list of the portfolio. And then it goes into a market cap weight. So large stocks have a greater influence over this ETF and the performance of it. And then when you start looking at that, it's pretty interesting because it provides a very broad diversification overall. Now, the Vanguard High Dividend Yield ETF owns over 500 stocks. This is not just looking at large cap itself, but it's looking at the dividend of the entire stock market itself that provides, of course, a broad diversification, which I love. So many stocks, it could end up diluting the ETF's yield, which is around 2.8%. Pretty good when you do in comparison to the S&P 500, which is a 1.2%. So you're over double and you have the diversification by putting money into this ETF. Now, of course, the VYM is something I personally do hold in my portfolio. Looking and really picking and choosing which one you want to hold, there are a lot of dividend paying ETFs. Now, the second one we're looking at is the Invesco S&P 500 High Dividend Low Volatility ETF. What exactly does that do? And this is where research and development, knowing exactly what you're investing in, it lives at the opposite extreme of the index than we just looked at. Starters, it starts with a S&P 500, which we know the index is hand selected to include largest, most economical reserve companies in the United States from the start. Then the Invesco S&P 500 High Dividend Low Volatility ETF, that's a lot to say, is doing something different completely than what we see in the other ETF. The next step in this one, which tracks the S&P 500, is to rank the S&P 500 from the highest yield to the lowest yield. Like we've seen, the 75 highest yielding stocks are selected with a limit of 10 stocks per sector. So when you think of all of the sectors that make up that S&P 500, it is only choosing 75 high yield stocks with a cap of 10 stocks in each sector. So if you think about that, if you have a sector, let's say for instance, the financial sector, where you have a ton of companies that fall within that 75 highest yielding stocks, they are only going to select 10, and 10 is going to be the cap before it moves on to another sector. If that limit is reached, other sectors are added up to the list, back into the 75 stocks. 75 stocks are then ranked by standard deviation, measure of volatility, and the least volatile 50 make it into the ETF, and this is weighted by a trailing dividend. So again, a little bit different. Radically different when it comes to this, focusing on over really the high yield over the diversification. When we started looking at the VYM, it was all about the diversification, holding those 500 companies. This one holds 75, which means it's a lot more focused on the dividend yield in here. Now, the trade-off, of course, is you kind of lose some of the diversification, but in the flip side, you do get a higher yield at 3.5%. When we start looking at high yield savings account CDs everything of that nature. They are slowly going away. The expense ratio a little bit higher at a 0.3%, which of course is negative, but this is something that is truly one of those funds that you see overall doing pretty well in the way that it's managed and the way that the ETF itself is built. But that being said, the ETF's historical performance hasn't been great over time with the yield. This, of course, is due to the market volatility. And without the diversification, they are losing quite a bit more than we've seen before. So when it comes to which one is right for your portfolio, this is where it kind of sums it up. Really make it logical. The first one, the Invesco, the S&P 500, the high yield dividend or high dividend low volatility, looks at low volatility stocks. So you have a little bit less kind of risk mitigation there. It's the slow and steady builder that we see, very slow and steady dividend growth, focuses on the higher, larger yield stocks, which of course gives you a little bit better return. But when we start looking at these side by side, between these two ETFs, of course, it is very personalized to what you like. But when you start looking at maximizing income, perhaps supplement Social Security, which we're looking to do in retirement, that is the reason why I focus on dividend ETFs and why I look at the percentage that I put in there right now. As it sits today, I do have 40% into a growth ETF. Now, there's a lot of different growth ETFs out there that you can absolutely focus on and build. The second 30% that I'm doing is in something like this. That is a high dividend yield ETF. I have the SPHD, I have the VYM that I do carry in different portfolios. And then of course, the final piece of this is the foundational or the core. We're looking at the VOO or the VTI. Either of those are going to be really the core index to build a 3 ETF portfolio, which does incredibly well. So when you start looking at this and thinking of retirement, it would be the Invesco that would win out during retirement. But looking and suggesting that Vanguard High Dividend Yield ETF, not a bad choice at all. It depends where you are on your personal investment journey. Again, if you're younger, if you have a little bit more volatility, when you think of the Vanguard High Dividend Yield ETF, which is the one that I do own, it makes sense because we're seeing a lot more of that growth factor out of those 500 companies that we have within the S&P 500 versus those 75. Even though it is giving you a higher dividend yield, you're not quite seeing the growth out of there. This is going to make a big difference where you are personally on your financial journey and looking kind of at the gains over the last multitude of years. Looking at about the last decade, the Invesco S&P has yielded about a 54% price change. So it has went up considerably. But when you start looking at the Vanguard High Yield Dividend, it has went up about 86, so definitely considerably more. And then when you start looking even at the total return, 130 on that Invesco S&P, 156 in the Vanguard High Yield Dividend. So again, even though the Invesco S&P 500 is paying a little bit more of a return, we are not seeing the growth factor out of there, which results over the last 10 years with it lagging a little bit. So again, personally, guys, I do own the Vanguard High Yield Dividend ETF, the VYM. But let me know in the comments what you guys think about these two ETFs. And as always, thank you guys for watching.